Hello, everyone. Welcome back to Nexus, your go-to channel for breaking down complex topics into simple, actionable insights. I'm your host, George, and today we're diving into something that affects all of us. Investment funds. Whether you're a beginner looking to grow your savings or a seasoned investor exploring new options, this video is for you. By the end of this video, you'll have a clear understanding of every type of investment fund out there, and the best part? You'll be able to grasp it all in just about 14 minutes. Let's get started. Mutual funds. Let's kick things off with mutual funds, one of the most popular investment options out there. A mutual fund pools money from investors to create a diversified portfolio of stocks, bonds, or other securities. What makes mutual funds so appealing is that they're managed by professionals. So even if you're not an expert, your money is in the hands of someone who knows what they're doing. There are different types of mutual funds to suit various goals. Equity funds focus on stocks, bond funds target fixed income securities, and balanced funds mix the two. Want to match market performance? Index funds are your best bet. Mutual funds are perfect for beginners or anyone looking for a hassle-free way to invest. Exchange-traded funds, ETFs. Next up, ETFs, or exchange-traded funds. Think of ETFs as cousins of mutual funds, but with a twist. They're traded on stock exchanges like regular stocks, giving you the flexibility to buy and sell throughout the day. Plus, ETFs often have lower fees compared to mutual funds. There's an ETF for almost everything: tech, healthcare, commodities, and even specific market indices. If you're a cost-conscious investor who values flexibility, ETFs are definitely worth considering. Index funds. Now let's talk about index funds. These are a type of mutual fund or ETF designed to track a specific market index, like the S&P 500. They're the ultimate option for passive investors who want steady, predictable returns without constant monitoring. The beauty of index funds lies in their simplicity and affordability. They usually have lower expense ratios, which means more of your money is working for you. If you're a fan of the set it and forget it approach, index funds are your go-to option. Hedge funds. On to something a bit more exclusive: hedge funds. These are high-risk, high-reward funds designed for accredited investors. Hedge funds use advanced strategies like short selling, leverage, and derivatives to maximize returns. But be warned, hedge funds are not for everyone. They're best suited for individuals who can afford to take on significant risk. If you're a high-net-worth individual looking for aggressive growth, hedge funds might catch your eye. Money market funds. For those who prioritize safety and liquidity, money market funds are a great option. These funds invest in short-term, low-risk securities like treasury bills and commercial paper. They're not going to make you rich overnight, but they're an excellent place to park your money if you're looking for stability. Money market funds are ideal for conservative investors who value capital preservation. Bond funds are another low-risk option, but they come with a little more earning potential than money market funds. These funds invest in bonds issued by corporations, municipalities, or governments. They're perfect for investors seeking steady income, especially retirees who prefer consistent cash flow over the volatility of stocks. Corporate bonds offer higher yields, while government bonds prioritize safety. Real estate investment trusts, REITs. If you've ever wanted to invest in real estate but didn't want the hassle of buying physical property, REITs are the answer. Real estate investment trusts pool money to invest in income-producing properties like apartments, office buildings, and shopping malls. REITs are particularly appealing because they often pay high dividends. They're an excellent choice for investors looking to diversify their portfolio with real estate exposure. Target date funds. Planning for retirement? Target date funds are a convenient option. These funds automatically adjust their asset allocation as you approach your retirement date. In your early years, they focus on growth. As you near retirement, they shift toward income and stability. Target date funds are perfect for anyone who wants a simple, hands-off approach to retirement planning. Closed-end funds. Unlike mutual funds, closed-end funds raise a fixed amount of capital and trade on stock exchanges. Their prices fluctuate based on market demand, making them a unique option for seasoned investors. Closed-end funds are a bit more complex, but they can offer high returns if you know how to navigate market dynamics. Alternative investment funds, AIFs. Alternative investment funds include private equity, venture capital, and commodities. These funds operate outside traditional asset classes and are often reserved for sophisticated investors. If you're looking for something unconventional and don't mind higher risks, AIFs could be a good fit. Just keep in mind, they often require a significant initial investment and have long lock-in periods. Fund of funds, FOF. A fund of funds, or FOF, is exactly what it sounds like, a fund that invests in other funds. This provides multi-level diversification and exposure to various strategies. While FOFs can be a great way to hedge risks, they often come with higher fees since you're paying for multiple layers of management. Socially responsible funds, ESG funds. In recent years, ESG funds have gained massive popularity. These funds focus on environmental, social, and governance factors, ensuring that your investments align with your values. If you care about sustainability and ethical investing, ESG funds are an excellent way to make a positive impact while growing your wealth. International and global funds. Looking beyond your borders? International and global funds invest in companies outside your home country or across multiple regions. These funds are great for geographical diversification, but come with additional risks like currency fluctuations and geopolitical instability. If you're comfortable with these risks, they can open up exciting new opportunities. Sector funds. Finally, sector funds focus on specific industries, such as technology, healthcare, or energy. They're perfect for investors who have strong convictions about the future of a particular sector. However, sector funds lack diversification, so they're inherently riskier. Make sure you're confident in your research before diving in. Conclusion. And there you have it, every type of investment fund explained. From the simplicity of index funds to the complexity of hedge funds, there's something for everyone. Remember, the best investment fund isn't about what's trendy. It's about what aligns with your financial goals, risk tolerance, and timeline. If you found this video helpful, make sure to like, share, and subscribe to News Nexus. Drop a comment below to let us know which type of investment fund you're most interested in. I'm George, and I'll see you in the next video. Until then, happy investing. For OE.